Hi, I'm Farwood, one of the dealers here at Capital Spreads, and I'm joined today by Bill Hubart, a market expert. We're going to be discussing some of the recent topics in the news, as well as a couple of things to expect in 2014. So Bill, originally I had a bunch of questions prepared for you for assuming the Fed wasn't going to taper, but Bernanke had a different opinion. So were you surprised at all by their decision to taper?
I knew it was coming, okay? I had about a 15 to 18% probability that they would start it. I think the key thing is in May, June, September, and October, it was almost confused.com. You know, they told us back on the 22nd of May that it was coming, okay? Then there seemed to be some kind of confusion in the communication. Well, there was no confusion last night. The communication was solid as a rock. And he reiterated again what the market, may have forgotten. Tapering is not tightening. And that's, we saw that especially in the bond market, okay? We saw it back up in the 10-year, about 290-ish, but we didn't hit 3, 3.25, 3.5, and you know, people didn't bail out of the U.S. Treasury market yesterday.
Yeah. So initially one of the thoughts for why they wouldn't taper was the current low inflation levels. Do you think the sign of the early taper is a sign that the Fed isn't too worried about inflation coming into 2014?
Well, I think I'm going to show my age probably. I just remember years ago, you know, when I was a presenter at one of these other stations, and I remember talking to somebody, we got UK inflation numbers, and it came out, I think, at 2%. And my question to the young guru, who I think maybe was 25, he said, well, I said, is that monthly or annually? He said, well, that's annually. And I said, well, I remember October '79 in the States, okay, and inflation was 28.9%. I mean, that's inflation, 2% is not. And I think one of the things that this has shown, okay, one, the Federal Reserve made a mistake in 29-30 when they raised rates too soon because they were worried about inflation. And if you looked at all the textbooks, quantitative easing equals inflation. Well, there isn't any inflation. And one of the things where I feel positive now is because one of the major, economic numbers that the Fed looks at is the PCE deflator. So, yes, inflation is still low, but it's not low by, quote, historical standards, if you want, with where the markets are. So therefore, they feel, not this year, not next year, but we will start seeing a positive improvement, okay? And central banks need it. Retailers need inflation, because if you know you can buy the same thing 6 months from now, you're not going to be in the shops this afternoon.
Okay, I guess the next question would be, the Fed announced they're going to try and keep the base rate at around 0.25%.
Yes.
They've increased their projections for growth next year to 3%. The unemployment, they expect it to be around 6.3, 6.6. Seems like quite a positive outlook for 2014, wouldn't you say?
Yes, I think it is. And one of the things, as you just mentioned, you just mentioned about the employment numbers. Now, one of the things is we saw here in the UK yesterday, what do we got? 30 million plus employed. But I mean, this was something I discussed, 2.5 years ago in one of the seminars I give for here, is that the simple fact is, even 2-3 years ago, so much of the employment here in the UK, as it is in the US, is temporary. People taking second jobs, or kitchen industries. And if you looked at yesterday, I mean, something like almost half of the people that are employed, second jobs, temporary, and I guess everybody wants to have their foot in the door when the market starts to improve. Now, that is not a positive sign, okay? Because if you are a company and you know you've got temps, you as a company are not going to start building up inventories. You're not going to start building up this, that, or the other. So I think that's one of the things to look at. And again, it's the same situation in the States, okay? There's still a lot of temporary workers. So yes, we have an improving employment picture. But as you saw with the Fed, they have now gone down to a 6.5 to 6%. Because what they want is they want real full-time employment. And the reason why that is, the U.S. employment number is called non-farm payrolls. When that was set up, in 1932, because in those days, so much of the workforce in the U.S. were vegetable pickers, or construction people, okay? And what they wanted to do was they wanted to have the people that were working in the coal mines, the people that were working for General Motors, that had permanent employment, okay? Rather than temporary. So.
Would you say the US is more reliant on these temporary workers than, say, some of the European markets, or?
Yes, I think it is. For the simple fact is, because of our social laws, okay?
Yeah.
You know, over here, the simple fact is that you hire somebody, well, you can't get rid of them, okay? If
Yeah.
you do, you have to write 15
It's a lot of
letters.
red tape.
You have to get approval from their grandmother and stuff like that. And you see, and also, I mean, I've not worked in the States in 25 years, but there's no contract, okay?
Yeah.
If somebody wants to get rid of you, you know,
You're gone.
you could be AVB, okay?
Yeah.
And they get rid of you, okay? Over here, you know, they got 6 months, golden hello and golden handshakes.
Sure.
So I think but that is basically, you know, the way it is. One of the things, though, that I think will be interesting to see over the next, say, 3 to 5 years will be the transition in permanent type employment, okay?
Yeah.
That will be extremely important because here in the UK and in the US, you know, so much of, quote, basic industries are now in China, are now in India, et cetera, et cetera.
Okay. So this year has been a great year for the markets. A lot of the indices are posting double-digit percentage gains. Do you think it's something we could get a repeat of in 2014?
Yes, I think we will have as good or better year, but as you just mentioned, we won't have probably double digits because we're starting from a much higher.
Exactly.
And I think one of
Dow
the
closed
interesting
at an all-time
things
high
is,
yesterday.
and so the simple fact is, and we see the Nikkei in the FTSE, we will start seeing, because what you see because of the low inflation we talked about earlier, people are not looking at, they can look at lower PE ratios, EBITDA, because inflation is not eating away a certain amount of their profits.
Yeah.
So we will have as strong a market. The flows will be quite interesting. One of the things that we saw that maybe have helped, I guess, the stock markets, at least since May, when the Fed told us they were going to taper, everybody was so afraid that the Treasury 10-year was going to go 3, 3.25, 3.5. Well, you know, it hit 3% once. It didn't even come close yesterday at 3%. So what you'll probably start seeing is, you may start seeing a shift in the European bond markets, because you're seeing the spread between the 10-year and the other European or other bond markets, you know, is the widest it's been since 2007. So you may start seeing some people moving out of that. Also, one of the things to look at is how many people have been hurt by ETFs in gold, and silver, and commodity. I mean, you've seen billions of dollars that have been taken out of those.
Yeah.
Well, they start going back into more bond funds, especially if we start seeing inflation and we start getting 3.25, 3.5% in a bond rather than, you know, a negative.
So you just mentioned gold. It's been quite an interesting year for the gold markets. Looks like his historic bull run's finally come to an end.
Yes.
Do you think it's lost a bit of its shine?
Yeah, I think it has. Everybody's buying bitcoins now.
Yeah, that's in
But
Ukraine.
yeah, I mean, it has. It was such an easy trade for 12 years,
Yeah.
okay? And I mean, anybody that was really watching the market was September of 2 years ago. I mean, you know, we reached, what, $1,900 plus. Now, again, anytime people start looking at things like that, which are non-interest bearing, everybody else has to have an inflation register, okay? Now, if you looked at inflation in the past 25 or 30 years, gold should have been trading at like $4,000, okay?
Yeah.
So, you know, people got in late, and I think one of the things that, while I'm not bullish on in any way, shape, or form, especially on gold, if the dollar starts to improve, that will be negative. Also, you have, you know, the Indian authorities have put, you know, you're not seeing the physical buying, whether it be in India or China, et cetera, and so it will have to reach a point. I don't know what that point is. I don't know whether it's 920, 850, et cetera, where all of a sudden gold doesn't become cheap; it becomes attractive.
Yeah.
And one of the things that will help at least keep a base at gold is because you still got the central banks and the Washington Accord. You know that you're not going to see them selling it.
Yeah.
But now they may start looking at an alternative to buying gold. So.
The oil market looks like it's going to be a really interesting market next year. We've got Iran and Iraq both looking to increase their exports. Do you think the pressure is going to fall on the Saudi to try and keep those, to control supply?
Well, I think it already has. I mean, forget you talked about Iran, Iraq, or Libya. I think that the simple fact is the U.S. in shale oil production, okay, has kept Saudi being willing to keep the price at a level, because if it gets too low, and we've all known that. I mean, it started 20 years ago. If it was too low, or excuse me, if it got too high, then the Canadian tar sands became a viable alternative. Now it's a situation where Saudi Arabia will make sure that there's a balance. I'm, you know, I think we can see Brent at 100. We can see WTI maybe in the mid 80s.
Yeah.
And one of the things I'm sure you've noticed is the spread between Brent and WTI
Yeah,
changes, and that will continue to change. But as I say, with the shale oil production, and I mean there are people out there that are calling it Saudi America now.
Yeah. So going back to Iran and Iraq threatening to increase production, I mean, there's still heavy sanctions on Iran, which limits how much they can export, whereas Iraq is facing supply-side difficulties with political and economic issues going on there. It just feels like it's more of both of them are just trying to assert their dominance in the OPEC.
And it's a situation, everybody was expecting it as soon as Iraq was free. Well,
Yeah.
I mean,
it takes time. It's
yes,
not something that
I
can
think
happen
they've
overnight.
increased it by 4 barrels a day or something.
Yeah.
Some stupid, meaningless number, okay? So you haven't seen the price go dramatically down. So it will be a situation where OPEC will be monitoring it. There will be a balanced price.
Yeah.
But the key is going to be and I think the improvement that we've seen in the oil price is strictly in the potential improvement in the global economy. Right? And if that continues to go, even if you say 3%, I mean 3% in the U.S. is not very good.
Yeah.
But it's considerably better than what we're going to see in the Eurozone.
Yeah. So I thought we'd wrap up the section by just discussing maybe a couple of stocks you want to keep your eye out on for 2014. I know you have some Royal Mail shares.
Yes,
Do you
I
still
do.
have those?
Yes, I do, and I bought more.
You bought more since then?
Yes, my average price is about $4.70 or something like
Okay.
that.
Good.
I still think it goes to 6 plus.
Yeah.
I like technology, biotechnology.
Yeah.
I like stocks that will be health oriented. Okay, because whether we like it or not, we're all getting a little bit older. I don't know anything about Twitter or
Yeah.
Facebook or Google and stuff like that. I'm still not a buyer of bank stocks.
Yeah.
I sold all of my mining shares probably 3 years ago. I think what you're going to see is, I think in like retailers, I sold Tesco ages ago, but I mean, if you look at stocks like Aldi or Lidl, in other stocks, I mean, another stock that I like is Plus 500. Okay, this is an online stock. It's doubled in value since I bought Merlin. If wages start to go up and children start to go out, but I mean, it's a situation where most of the stocks I own are long term. But it's like everybody else, if they go up 75% one day, I'll sell them.
Yeah.
But I mean, I'm very selective.
Sure.
I bought a company called Kentz, K-E-N-T-Z.
Yeah.
At about 185. The last I looked, it was 630. I mean, that's what I'm looking for. I'm looking for story stocks. I bought a thing called Town Center.
Right.
Okay. If we're looking at house building and stuff like that, another little stock that was mentioned in one of the news called Inland Homes.
Right.
A guy who's buying up. I tell you, it was in Stockport. Okay?
Oh, really?
And this was, I don't know, about 2 years ago, where the council there, right,
Yeah.
sold, ready for this, 35 houses. 35 houses in Stockport. You know what the
Right.
price was?
No.
£1.
Wow.
And the simple fact is they couldn't care less about that. But these were houses that needed new drapes, new curtains, new carpets,
Yeah.
new
Complete
televisions.
renovation.
And the simple fact is, if you got 35 people living there, they're going to be council tax.
Yeah.
And this guy likes buying those types of properties, okay, in rundown areas. I mean, here's a stock.
A lot of people make their living like
yes,
that.
and there's nothing wrong with that. Interest rate sensitive stocks, we're not going to go up. But I mean, I'm selective. I have a very good broker.
Yeah.
But interest rate sensitive stocks.
That's great. Before we wrap up, just a quick question. You mentioned Bitcoin earlier. Do you think it's just a bubble? I know it's come down a bit since its highs of 1,000
What was
yesterday.
this?
Bitcoin. I think it dropped down to around 500 yesterday. Do you think it's just a fad, or?
Yeah, I think it is. Okay.
Yeah.
I mean, for the simple fact is, South Sea bubble. Did you buy any tulips in Amsterdam in 1648?
The black tulip.
Yeah. Okay. I think it's probably more legitimate now, only because the simple fact is you can get on IMF. But I mean, you saw yesterday China. Excuse me, basically said sorry, nothing,
And
and
it
it dropped
dropped.
70% or something
Yeah.
like that.
It's a big drop.
And that's going to happen, okay? I know there have been several articles in the newspaper recently. I know that Merrill Lynch just wrote a huge article. They're very positive on Bitcoin. But the
Very
simple
curious to
fact
hear
is if you are, probably more so being a bond trader, okay?
Yeah.
The specific number we looked at is the money supply, right?
Right. Yeah.
Central banks, that's what they're looking at, the money supply. Hence the daily repos or reverse repos to keep that M1, M2, M3 all the way up to M27 or what it is. And so therefore, you haven't had the Bank of England. Yes, I know we get Winston Churchill and Polymer and Jane Austen, but I mean Mark Carney has is saying, well, the new bitcoins will be out in the morning. So we've had this before. Maybe I'm just showing my age, but the simple fact is that, and I wouldn't surprise me that story that was in the newspaper 2 or 3 weeks ago about some guy in Wales lost $4.5 million.
Yeah, on his hard drive, he was looking through the scrap heap trying to find it.
Maybe it's me being too old. I'm not sure. Maybe that was a real story, if you know what I mean. It was good.
Just good publicity.
Yes. We haven't seen 5,000 people out of that rubbish bin. Digging the whole thing up.
Or going out with metal detectors to try to find it. Right, well, I think that's about it today. Thanks for joining us, Bill.
So let me wish everybody a Merry Christmas and Happy New Year, and I will see you once we get into January. Thank you.
Merry Christmas and Happy New Year.